And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Hey, good morning, friends and traders. Welcome to the market forecast for Wednesday, September 28th. I am JD, filling in for Hogue this morning, who's taking a little time off today. I'm doing a little work on the floors of my home right now, so I had to move some of my gear into this little storage room for a few days, just in case you're curious about this impressive background behind me. But anyway, as always, thank you for choosing to spend your time with us. Our goal here is always to provide accurate context and sound risk management to the markets, so hopefully we can all walk away from this with a little more knowledge and understanding than we had before we started. Remember to hit that lucky like button. Feel free to share your comments and feedback in the chat. We do appreciate all forms of feedback here. And if you haven't already, go ahead and subscribe to our YouTube channel so you get all those wonderful updates every time we go live. Just a quick reminder for today about the schedule for today. Since Hogue is out, there is no group coaching today. I repeat, no group coaching. Group coaching has been canceled today. In other news, we have Hurricane Ian has been upgraded to a Category 4 storm, which means wind speeds are over 135 miles per hour, which can be extremely dangerous and expected to hit land sometime this afternoon. Let's hope everyone in the path of that storm has a plan to stay safe. I'll be keeping an eye on that one for sure. As far as the economic calendar goes, we have a few numbers out already this morning. First, the MBA mortgage applications. Composite index week over week down 3.7%. The purchase index week over week down 0.4%. And the refinance index week over week down 10.9%. Next, we have wholesale inventories, which came out at 7:30 Central Time. The consensus range was for 0.3% to 0.6%. Actual came in much better at 1.3% month over month. Next, retail inventories. Prior, 1.1%. Month over month, we are up 1.4%. And finally, international trade in goods. Consensus range was for minus 92 to minus 85 billion, and actual came in right in the middle at minus 87.3 billion. A few more numbers coming out later this morning. We have pending home sales at 9 o'clock Central Time, State Street Investor Confidence Index at 9 o'clock Central Time. The EIA Petroleum Status Report at 9:30 Central. And that's about it. A couple Fed speakers, Fed heavy today. Raphael Bostic is speaking right now. At 9:10, we have James Bullard speaking. 9:15, Jerome Powell is speaking. At 10 o'clock, Michelle Bowman speaks. And at 1 o'clock, Charles Emmon is speaking. Those are all Central Times. So heavy Fed speak on the calendar for today. Overnight, stocks in Asia closed mostly lower. The Shanghai Composite down 1.58%, the Nikkei down 1.5%, and the Hang Seng Index closing out at minus 3.41%. In Europe, stocks are trading mostly lower this morning also, with the DAX down 1.22%, the CAC down 1.29%, and the FTSE down 0.81%. Stocks here in the U.S. are also poised to open a little mix right now. We have the ES in the midst of a nice rally, and NASDAQ is just about back at settlement price. VIX is up about 1.34% to 33.59 right now, and the 10-year is currently holding at 3.92%. Let's take a look in the room and see who's here. Good morning, everyone. Dark Kevin, you are right. You did win the trade. You did win the prize today, and like I said, the prize is the notoriety of being the prize winner. So enjoy your day, Dark Kevin. Tachyon, hello. Patrick, good morning. Caprice, Dan Trader, Jules, Joel, Jorge, Glitter Sandwich, The Rooster, Sarah Hall, Brody, Zerain, John, Chillin' with Dylan, Vince, Jan, Heckle Matters, Trading Research. Everybody, welcome, and good morning. Great to see you. I just noticed it's a little dark behind me. I'll work on the lighting later. All right, what do you say we just jump into it? I'll queue up a few charts. I did some research about 45 minutes ago on this. Things have changed, though, since then. But let's get in and take a look at some of these charts. So here is our daily of the December contract in the ES. So yesterday the ES closed about 9 points lower, making it 6 consecutive lower closes, all on increasing volume you see here. The December contract traded about 2.9 million contracts and picked up an additional 5,700 in open interest. We also see prices finally testing these two recent lows here and bouncing back to close near settlement price yesterday. Hogan's been talking for a few days about the longer-term position traders or institutional traders building short positions and keeping pressure on the shorter-term traders who got long in the recent days. It's clear that that pressure was on overnight, yesterday a little bit during the day, and overnight. But we see the ES railing back. Last time I updated this was about 15 minutes ago, so the ES has rallied 25 handles in the last, well, let's call it the last half hour. Let's move over to the 4-hour chart. Here we can see a couple of days of consolidation going back to Friday. Price is finding some support at last week's low here, and some shorter-term traders getting long going into yesterday's session. Here's the flush out right here during regular trading hours yesterday and the subsequent rally back to settlement. This green line here is a 10-period moving average, which has been a decent source for attracting sellers going back a few weeks. We're trading right above that just right now. So I think a test of this 20-period moving average here wouldn't be out of the question today if this buying pressure continues or if buyers keep stepping in. We were looking like we were going to test this weekly kickoff low just a little while ago until this pop just happened. Let's take a look at our 30-minute. So here we are seeing that consolidation, a little bit of consolidation overnight. Prices finding some rejection around yesterday's point of control here. Overnight inventory looked to be short until just a little while ago. It is now balanced out and getting long going into the open. This market's poised to open inside range, inside value from yesterday. I was real curious to see what prices would do around this 3,600 level today, weekly kickoff low. But right now there is some strength in this market. Overall, here's a continuation chart. Overall, prices continue to just kind of hover around, bouncing along the VWAP here. We're still well below these shorter-term moving averages, too. The green is a 10-period, blue is 20, red is 50. So on this continuation chart, these would be 10, 20, and 50-day moving averages. Volume and open interest continue to increase on the way down. Momentum is still signaling lower prices. Prices did travel through the swing low from back in June today. It was a nice test, but we're back above it again right now. And we also have, let's go back to this 30-minute real quick. We still have this unchecked gap from last Thursday into Friday. I would say picking bottoms is a dangerous game right now, but there are some bulls in there this morning. I would say best to be patient, wait for those pullbacks to get on the right side of this one. As we all know, a good pullback is healthy for a bear market, right? Let's take a look at crude oil. So last week we saw the breakdown, taking out these early September lows. Volume has been pretty consistent, kind of dropping off since the roll. Then yesterday we got this nice pullback, follow through with it this morning. Yesterday the November contract closed up $1.79, about 283,000 contracts traded, but there was a loss of roughly 9,000 in open interest. Pardon me. That drop in open interest could possibly be related to Hurricane Ian, expected to hit land sometime today. There are a number of rigs shut down in the Gulf of Mexico at the moment, which might have a temporary effect on oil supply. But we are seeing some nice buying in this market right now. Here's our 4-hour chart. Paints a little bit of a different picture. It's almost like we were in a bit of consolidation. There was sort of this diamond pattern forming right here, which we're breaking out of on the upside. This 20 period moving average has been a decent line in the sand for the last few days, and we're now trading above that. We did actually see volume dropping off a bit the last couple of trading sessions, but I think we're going to have a nice pop in volume going in today if this rally does continue. A breakout of this diamond pattern might be good for a short-term day trade, which we're doing right now, but I think we're going to be seeing a nice spike in volatility while the hurricane watch continues. Here is our 30-minute chart. Zoom in just a bit there. Here's an even better look. We had this double distribution day on Monday, then the repair day yesterday. Overnight inventory was balanced out until a little while ago. Short, balanced out. Overnight inventory is now getting long going into the open. We are back through value above yesterday's high, testing Monday's high right now. And yeah, you could see a super close-up of this small little diamond pattern here, which we have, if you can picture, I didn't draw a trend line here, but if you can picture a trend line going from these two highs, we are breaking out of that pattern right now. Overall, downward structure of this market is still intact for the most part. Like I said with the ES, pullbacks are healthy in bear markets, but keep your eyes on the news for hurricane updates today. Right now, there's a super short-term day trade for this little diamond pattern in progress right now. I don't want to say it's too late for this one, but the breakout has occurred. We'll see what happens during regular trading hours. We're about 2 minutes from the open in crude oil right now. Here is our NASDAQ daily chart. So unlike the ES, NASDAQ did close a bit higher yesterday. Yesterday's settlement price was 11,333.75, up about 17.5 points. The December contract traded 841,000 contracts and added about 1,400 in open interest. You can see a couple of days of consolidation here with buyers stepping in around last Friday's lows. Then this drop overnight, it looked like it was about to make a test run at weekly kickoff low. Made a decent test of this June swing low back here, but now we're back pretty close to settlement. Let's see what the 4 hour is showing. So here's our 4 hour. Really just a close-up of this small period of consolidation here. Then the overnight breakout. You also see this 20 period moving average holding a sort of the line in the sand. Almost kissed it just a little while ago, but it has been holding for the last few weeks. That could be an important sort of inflection point going into the next couple weeks. That's a 20 period moving average on a 4 hour chart. Here's our 30 minute. We get a nice look at the small bear flag that Hogue mentioned yesterday. With overnight inventory going from sort of short to long, there was a minor test of, if you could picture the lower channel line for that bear flag. There was I guess you would call it a false breakout overnight. There was a test and then came back through. We're going to open inside range, inside value from yesterday, which is a lot different than it looked just about an hour or two ago. Overall, the NQ was the strongest of the equity markets yesterday. Started out a bit weak this morning, and now it's looking a little bit strong again. Here's a continuation chart, actually. Similar to the ES, prices just continue to bounce around this VWAP here, well below these shorter-term moving averages. Volume and open interest have increased during this break, and momentum is still pointing to lower prices right now. If you do insist on getting long, make sure you have your risk parameters mapped out in advance. Otherwise, you could just stay patient and wait for a better trade entry on the right side of this market. Over 2-hour gold chart. Here is our daily of the December contract. Yesterday, the downside auction took a little bit of a break. The December contract closed up close to $3 with 197,000 contracts traded, and just a small increase in open interest. I think it was around 160 or 180, something like that. Yesterday was an inside day. I believe Hogue referred to it as a dead cat bounce, which is really just a short-term pop in the middle of a downtrend. And here we are again. We were heading lower this morning. We took out Monday's low overnight. Now we're trading on the highs of the session again. Momentum still pointing lower, but trading a little higher again this morning. This seems to be the theme. Here's our 4-hour. Here's our dead cat bounce from yesterday. Even looks like a little bear flag, which broke out. Saw a little dip in volume. But now, with this rally right here, this candle that started a little while ago, here we are testing this 20 period moving average, blasted right through 10 period, sitting at the just underneath 20 period moving average right now, and this volume looks pretty decent. Here's a look at the 30-minute. Better look at that rip. So here we have a close-up of yesterday's inside day. We had sort of a double distribution trend day on Monday. Yesterday's prices spent the entire session inside range and value from Monday, basically a repair day. Now we have overnight inventory starting off short, balancing out, and now we're just ripping higher. Did test Monday's low overnight, took it out by just a little bit, came right back to settlement from yesterday, found a bit of rejection around this point of control, and now we're just ripping higher. Again, with this market, the downside structure is still intact. Prices are currently well below the 10-day moving average. Momentum still pointing to lower prices. But this recent decline in volume and open interest is possibly telling us something else. Not something else. There's a short-term strength in this market, and like I was saying with all bear markets, a little bit of strength goes a long way ultimately in a solid bear market. With that, let's take a look at the chat and see what's going on. Good morning, Serenity Trader, JD Royalty. Let's go. I like that name, JD Royalty. Mike, I'm not sure what the stat is. 1.6 here, 2 days from 126.21. Storm likely, most likely Charlie path. those are some interesting stats. Thanks for sharing that, Mike. Subconscious, good morning. Sharing the JDs. Yes, absolutely. JD royalty. All right, with that, to close it out, just a quick reminder, there is no group coaching today. And also in place of the recap this afternoon, we have Top Steps founder Michael Patak and Dan Hodgman going live at 3 o'clock Central Time, live on YouTube for a Q&A session. They're going to discuss some of the recent upgrades to the Top Step program, and they're going to field questions in the chat from community members. So make sure to catch that. Easiest way to do it is subscribe to our YouTube channel. You'll get an update a few minutes before it starts. Well, that's it for me, folks. I hope you all have a great day. Hogue should be back tomorrow. If that changes, we'll let you know in the community, probably on Facebook or Discord or something like that. But other than that, everyone have a great trading day, and we will catch you later. All right.